What if I told you that one of the biggest fintech companies in the world just stormed into Wall Street with a debut that shocked even the most confident investors? Imagine a company that started in Sweden, focused on letting people buy now and pay later, and within just a few years it has become a giant, competing head-to-head with Affirm, Afterpay, and even traditional banks. That company is Klarna. And on its very first day of trading on the New York Stock Exchange, Klarna's shares skyrocketed, opening at $52 apiece, well above the expected range, and instantly turning its IPO into one of the hottest financial stories of the year. But behind the celebration, the confetti, and the applause on Wall Street, there are stories of risk, massive investor gains, painful losses, and the real question of whether Klarna's business model can survive the tough years ahead. Today, we're going to take you inside Klarna's IPO debut, its vision for the future, and the winners and losers created in the process. The energy on Wall Street was electric. Traders, investors, and analysts were glued to the screens as the ticker symbol for Klarna lit up for the very first time. CNBC reporters were standing by, cameras rolling, as the opening bell echoed through the New York Stock Exchange. When the first trade printed on the screen at $52, the room buzzed. Cheers erupted from the Klarna team standing on the balcony. For many of them, this was the culmination of years of effort, setbacks, and planning. The company had priced its IPO at $40 per share just the night before, already above its expected range, raising a whopping $1.37 billion for the company and its shareholders. Yet, when those shares immediately popped 30% in early trading, the symbolism was clear. Wall Street had an appetite for Klarna, and the buy now, pay later revolution had just reached a new milestone. Klarna's co-founder and CEO, Sebastian Siemiatkowski, stood in front of CNBC's cameras shortly after the opening trade. His face carried both relief and excitement. With a smile, he explained, "To me, it really just is a milestone. It's a little bit like a wedding. You prepare so much and you plan for it and it's a big party. But in the end, marriage goes on." His analogy captured the sentiment perfectly. Yes, the IPO was a celebration, but the hard work of building a sustainable public company was only just beginning. This was not an overnight journey. Klarna had initially planned to go public earlier this year, but those plans were derailed when President Trump announced sweeping tariffs back in April. The uncertainty in the market forced Klarna to hold back. But now, as conditions stabilized, the timing seemed right. The company entered the public markets at a valuation of about $15 billion, a steep drop from its eye-watering $46 billion private valuation during the 2021 fintech boom. Still, it marked a major turning point, not just for Klarna but for the entire tech IPO market in 2025. The buy now, pay later market, known as BNPL, has exploded in popularity, with companies like Affirm in the United States and Afterpay in Australia gaining millions of loyal users. Klarna, however, has managed to distinguish itself with a combination of sleek design, global reach, and an aggressive push into new products. It's not just about letting people split payments into 4 installments anymore. Klarna has ambitions to become a full-fledged financial services powerhouse. In recent months, the company rolled out a debit card in the United States and even launched personal deposit accounts. According to Siemiatkowski, over 700,000 Americans have already signed up for Klarna's card, and there are more than 5 million people sitting on a waiting list. Those are eye-catching numbers, and they suggest that Klarna's appeal extends far beyond short-term financing. As Siemiatkowski explained, "We're attracting a slightly different audience maybe than the Affirm card. I get the impression that is more a card where people use it simply to be able to have financing with interest on slightly higher tickets." In other words, Klarna wants to be more than just a financing tool. It wants to be a lifestyle brand, a financial partner that people use every single day for ordinary purchases, not just big-ticket items. But while the excitement around Klarna's IPO was undeniable, so too were the risks. Regulators, particularly in the United Kingdom, have been sounding alarms about the BNPL industry. Concerns about affordability and consumer debt have triggered proposals to bring these services under stricter oversight. If such rules are implemented, Klarna could face tighter regulations and potentially higher costs, which might eat into its profitability. And investors on Wall Street know this. The IPO might have been a party, but the hangover of regulatory scrutiny could arrive sooner than expected. For investors, the Klarna IPO created both enormous gains and devastating losses, depending on when they got in. Let's start with the winners. Sequoia Capital, one of the most famous venture capital firms in Silicon Valley, first invested in Klarna back in 2010. Over the years, Sequoia poured a total of $500 million into the company. During the IPO, Sequoia sold just 2 million of its 79 million shares, raising hundreds of millions while still keeping a massive stake. Based on the IPO price of $40 per share, Sequoia's total return so far is estimated at about $2.65 billion. For Sequoia partner Andrew Reed, who was still in college when the firm first backed Klarna, it's been an incredible journey. Standing in New York on IPO day, Reed reflected, "Being here in New York 15 years later with over 100 million consumers and over $100 billion of GMV and close to 1 million merchants, it is staggering what 1 year after another of execution and growth and Sebastian's long-term vision can do." His words echoed through the financial press, a reminder of just how long-term thinking in venture capital can pay off. But not everyone walked away smiling. SoftBank, the Japanese investment giant, led a funding round in Klarna back in 2021, when the company was valued at a staggering $46 billion. At that time, it seemed like Klarna could do no wrong. BNPL was booming during the pandemic as online shopping surged, and valuations for fintech companies hit historic highs. Fast forward to today, and SoftBank's stake has plunged in value. What was once a golden investment has now become a painful reminder of just how quickly markets can shift. For SoftBank, the Klarna IPO is not a victory, it's a bitter loss. Meanwhile, on the trading floor, analysts debated what Klarna's IPO meant for the broader market. This year has already seen a wave of high-profile tech offerings. Stablecoin issuer Circle and design software platform Figma both soared in their debuts. Crypto exchange Gemini is expected to go public later this week. Klarna's success could fuel even more demand for new listings, signaling that investors are once again hungry for innovation after years of volatility and caution. But the question remains, is this enthusiasm sustainable, or is it another bubble waiting to burst? For Klarna's employees, many of whom had been waiting years for this moment, the IPO represented more than just a financial milestone. It was validation. Walking out of the NYSE building after the opening bell ceremony, groups of employees hugged, laughed, and snapped photos under the massive American flag draped across the facade. "We've been through so much," one employee told a reporter. "Layoffs, delays, market crashes. This makes it all worth it." Their pride was palpable, their belief in Klarna's mission unwavering, even as the challenges ahead loomed large. Back in Sweden, the company's home base, the news of the IPO was greeted with national pride. Newspapers splashed the $52 opening price across their front pages. For many Swedes, Klarna has become a symbol of innovation and ambition, proof that a company from Stockholm can go toe-to-toe with Silicon Valley and Wall Street. As the first day of trading drew to a close, Klarna's stock price fluctuated but remained significantly above its IPO price, cementing its debut as a success. Investors left the exchange with smiles, journalists filed their headlines, and analysts scribbled notes for their clients. But perhaps the most telling moment came once the cameras were off and the celebrations quieted down. In a candid conversation with CNBC, Siemiat Koski reflected on the future. "This is not the end," he said quietly. "This is the beginning of a new chapter. Now we have to prove ourselves, not just to our customers, but to our investors as well." The Klarna story is still being written. The IPO may have been the wedding, as the CEO described, but the marriage, the day-to-day work of building a global financial institution, is what really matters now. Can Klarna navigate the regulatory storms, outcompete rivals like Affirm and Afterpay, and truly reinvent itself as more than just a buy now, pay later provider? Or will it stumble under the weight of its own ambition? Only time will tell. But for now, Wall Street has spoken, and the message is loud and clear. Klarna is a force to be reckoned with.